Hey, what's up? It is February 20th and Tuesday, and it is now day 11 of my goal to double my account by the end of the year. So there's been a trade I got into yesterday that actually got out this morning. Then another trade for the S&P 500 that I'm in right now that I'll go over. But starting off, we'll start with the Dow Jones because that's the one that I was able to get in and out of for a nice little win. So the trade setup is the expanding triangle. Here you have, it's using the orange semaphores. There's point 1, 2, high, high, 3, low, low, 4. So you just put the Andrew's pitchfork on points 1, 2, and 3. And the levels we're looking at, you got the median line at 8.6, and the green line is the 618. So basically what happens is when this one, the fourth leg of it right here, when you get a semaphore form, which doesn't happen in real time, it happens after the price has gone away from it. When it's closed up in here somewhere, somewhere within the yellow line, as you see, never even went past it, but within there, that's when you go. That's when you go along with it. The one question I do have for myself for this one, I'm still trying to figure out is: do you leave it at the green line until price hits the 1.146 the other way? And I think that's how you do it, but there could be another one that I'm looking at, another area, and it's you use the Fibonacci rules, which I use for the other two trades I have, once price closes above the midline, and that could also be an option for me as well. But either way, it worked out this time because you see that's where it closed above it, so you just take it from the low to wherever the high was, which the high was right there. So when price comes back into the 23.6, the exit move would have moved to the 1.146 instead of the green line. But then when price hits the 50%, then which is actually, let's see here, no, that's it. So that would be it. Yeah. So then when price comes down and hits the well, I guess it hit the 50% right here. So anyway, so if I did do it where price using the Fibonacci ones, then the exit would have been right up here because that was the previous high, close of the previous high. You can see it ticked off it right there for a good 41 tick gain in Dow Jones. But I don't think for this particular setup that is the way to go. But I'll have to wait to see, because for this trade, what I did is I just, when it hits the 1.146 as part of the Fibonacci rules, then the exit moves up to the 23.6, as you can see right there. So got in where we were at 38,610, got out at 38,711, so for about 100 tick gain for it right there. I was looking to get in if price continued to go back down here. It came closer to 2.618, but didn't hit it before this morning when it went up, and took it out for a nice win for that one. So basically, just the question I have is, do I use the Fibonacci rules, or do I only use it if price comes back and hits the 1.146? But anyways, nice trade setup right there. We don't have, let's see here, there's 1, 2, 3. This isn't going to be an expanding triangle, but what we could have is potential inside pitchfork. All we need is a green semaphore. Greens are the least of the strength of the semaphores. It goes green, orange, red. To have a red, you have to have an orange, and to have an orange, you have to have a green. So red it goes green, orange, red as far as weakest to highest. So what we'd have here is we have our low. There's 0.1, 0.2 high, 0.3 high or low, and then potentially right here 0.4 would be a lower high. And so you just put the inside pitchfork on it, assuming that this one turns green up here, and you just wait to break out one of these ways. But that hasn't happened yet. But going over to the trade that we're currently in this kind of mash of stuff right here. Let's see here, which one I want to look up. All right, we will hide a bunch of this stuff here because there's a bunch of stuff going on in this trade setup. All right, so what we have here, hide that too. So what we have here is an inside pitchfork trade. In fact, I'll just delete that right now. We need that on there. It's an inside pitchfork trade. And what happens is, see here we have 0.1 the high, 0.2 the low, 0.3 and 4 are within 0.1 and 2 right here. So that's basically what it is. So we just put the inside pitchfork on points 2, 3, and 4. wait for price to close either north or south of the teal line right here, and it closed north of it right there. Then from there, what we do is we take for the previous low was, which is 0.2, take it up to wherever the high was. It could have been either 0.3 right here, which it actually was, because as you can see, here's where it finally closed above it, but this was higher, so that's where we put it on right there. So if price comes back to the 23.6, which it did, then the exit moves up to the 1.146. As you can see, that never got hit. So when price comes down, hit the 50% right there, which should be right there. Then price moves to about right, the exit moves to about right there, which is the closing high of that move. But as you can see, price continue to go down, hit the 1.146 right here. So when that happens, you move price to the 23.6 right there. As you can see, my exit right here, I always have my exits lower, either lower if you're looking to go up or higher if you're looking to go down from it, just to make sure I get filled for it. And so anyways, so price found a little support from it. Actually, we can get rid of this one. It's from another trade right there. Found a little support right around the 1.14. Looked like it was going up, and then just started going off down way more. Went all the way down. Hit the, see, I got my first entry in at 5,006, which is about right around the 1.414. And then my second entry at 49.78. So, right here. I had my exit. I'm not sure why I did not get in right there, because I know I was looking to get in back. Oh, because you know what? I got in, I think, on this candle right up here before it had ticked down here. But it came down here right off the 3.618, which for whatever reason, the 3.618 seems to be kind of like the backstop extreme level from this, from what I've seen. You know, eventually it could just blow it out and go past it, because before I thought the 2.618, but for the extreme moves I've seen before, the 3.618 going the reverse way has seemed kind of be the backstop for it, and for this trade it has been as well. So it just ticked off of there. So those are my two entries I got in for right there. And I mean, even if I just got in the 1.414, that's fine right there. But looking at this, it's a real good kind of risk to reward for what I've seen from these extreme moves. So we have both these contracts right up here for the exit right up there. So that's the trade we're looking at. So we are looking at, you know, for the next day or so, which it could take more than that, but to go up there to at least up to, what is that, about 5,025.50 for the SP 500 to go up there and for that to get hit. You can see, same a lot, goodness. You can see that, I'll just hide this as well. If you look at the, we'll just put this on there, so that's going to be the target. If you look at today's, and for some reason when there's a holiday, it combines like Monday and Tuesday together. So there's Monday right there, and here's today right there. It combines the day's highs and lows for some reason. But if we go by that, we can do that. And even if we just do today's highs right there, and tomorrow if we go up and hit the extension highs days, then we are easily within that territory if we go up there and hit that. So hopefully there'll be a day up tomorrow going for it. So that is the S&P 500 trade that I'm currently in right there. And then for some other ones I'm looking for real quick. Here is one, but this one hasn't solidified itself as an inside pitchfork trade, but we haven't had a close below the teal line right there. You see prices bouncing off, and the teal line level is 1.5 with the exit being 5. Cover Dow Jones. Oil, there's I really want to go long right here, but I still have questions about it, but I really do want to go long, because if those rules are true, and as you can see, here's an expanding triangle trade right here, 1 2 3 where was it, 1 2 3, yeah, all the way down here. You see it came up again, closed above the yellow line right there. Those allergies are killing me. And so the exit we have currently, the target we have for it is all the way up here, this green line right up here. And I have a sell order waiting for it up there because there's also another trade that's in right here, another inside pitch for trade right here. And so if price didn't come down and hit this green line right here, which is the current target we have for it, but goes up there and hits that, then I'll take the short all the way down to right here. But if price comes down and hits this down here, then I'll probably look at getting in long down here and taking it all the way up to over here. So if it holds true from what I was looking at doing, where you don't go long until price closes above the median line right there, then this would be, it could be, you know, whichever way it goes, it's got to obviously hit one of these ways first, either down here and hit this target, or go up here and hit this green line somewhere up here. So short if it goes up here, long if it goes down here. But if, say, I want to do the Fibonacci rules, so do we just use a low for that move up until we have the price breakout, which is right there. We want to get rid of that. So here we have it hit the 23.6 and also all the way down to the 50, came back up, and here's the previous high and hit it right there. So is the trade done? That's just the question I have right now. Is the trade done? I don't think it is. I don't think it is. I really think the rules you follow is only if price closes above the midline right there, then you use the Fibonacci rules for it. So what I'm looking for the oil market is a pretty big push up here in the next coming days to get up into the 80s for it. So right now we're in the 77s, low 77s, so looking for a push to get up closer to the mid 80s, so about a $3 push here next, and that'd be my next guess as to where it's headed. But if we do get the move all the way down here first, where it goes down to the mid 75s, then I'll be looking to, in fact, I'm gonna just go ahead and let's see here, what would that be if we're using that? Nah, let's go ahead and do that. I would look to go down and get in there if that happens. So price comes down here, look to go long right here. If price goes up here, so if price goes down here and hits that, look to go long and take it, you know, pretty dang high up there, closer to that up there. But if price, what do I have here? 110, 344. Yeah, that's just, I just put that in there for some reason. I'll let go short and then take it down, which would actually be, let's see here. So here was the high. Here's where it broke out before it came high, broke out right down there. Did not hit that. Hit it 23.6. So we're looking for exit being right there. Did not hit the 50s. So the next we have is the low, closing low of the move, which is right there. And then that also puts it closer to, but not quite yet, you know, the way up here, the 1.414 level. But look like it can go a little bit higher than that. So if it hits that, this orange line 1.146, then the exit moves to, in fact, I move this all the way closer to that, do 345 to the 23.6. So anyways, that's just, again, I did another video about that last week. Those are kind of like the areas. Still haven't changed too much for what we're looking for oil right there. Last but not least, NASDAQ. There was one I was very considering getting in down when it got closer to here today, but I didn't because I was already in two contracts for S&P 500. And the NASDAQ margin just for one micro contract is about $1,770, $1,770 for it. But, you know, obviously it has the biggest potential profit. But I did have this entry way down here by 3.618, kind of like the extreme level. Doesn't look like it's going to go down there and hit that. But if you look at this trade right here, so if we're looking at, you know, using, this is just the expanding triangle trade, 1, 2, 3, 4. There you have price came up closed above the yellow line, and probably the orange one didn't form until price was probably about up here or something like that. So here we do have where, so price closed above it, and it came down, hit the 23.6, also hit the 50, and then came down and would have hit the previous highs close right there for a win. But is that really where you keep it, or do we only take it into consideration when price comes down and hit the 1.146, then the exit moves up here to the 23.6? That is kind of where I'm leaning to for this specific trade setup right here, where the other two we have the inside pitchfork trade and the ABCD trade, which I haven't talked about because there hasn't been any of those setups going on, is where we look at for that. So as of right now, this is what I'm leaning towards for the Andrews pitchfork. Is we just take whenever price closes above the high right there is where you take it, or above the median line. That's where you put from the low to the high of Fibonacci, and then we only worry about it if price comes down and hits the 1.146. We move the exit instead of having the sloping green line, the 0.618 on the Andrews pitchfork. We move it to the 23.6 from the Fibonacci line and leave it at that. So that's really what I'm thinking about. I'm thinking that's the direction I'm leading towards this one. But anyways, starting to ramble right now. Real quick, look at Bitcoin. Bitcoin's been popping off. And here it is, getting close to the low target for the 5-wave Elliott move right here. It is out of this, just subjective trend channel that I drew for it. So if this is truly the trend channel right here, wouldn't be surprised for it to consolidate a little bit before it tries another push higher. But anyways, 54,475 is the minimum we're looking for because it is in a established 5-wave Elliott move. But of course, price can go much higher than that. My prediction is it will go much higher than 54. It will go much higher than 54,475, just because the past couple times we've had a move down, 5-wave move rally up to a new high, move down, 5-wave rally up to a move high, move down, and here we're in a 5-wave move. And so I'm predicting, just like the past two times, third time we'll get up, top the 70. I think we'll top the 69,000s over to this, at least to the 70,000s for that move right there. So anyways, that's it, and have a good one. Thanks, bye.